especially you look at the Fed's balance sheet going back 10 years. I mean, we've
Yeah.
doubled and tripled. I mean, definitely they should cut it lower.
Okay. Let's talk about interest rates. So your outlook on interest rates. The Fed fund rate is going to fall as the Fed cuts.
Right.
It's debatable as to how many cuts they'll engage in over the next couple of months. But what about the long end of the curve? The 10-year yield has been rising, and that's been, usually you don't see the 10-year yield rising as much as it has following a Fed pivot. What's going on there, do you think?
Well, I'm going to look at the 2 year for a second because
Yeah,
usually the 2 year is not going to be rising when the Fed lowers rates.
right.
And this is the strange thing is the 2 year was at 3.53% on September 24th, just when the Fed was cutting the rates, and now it's at 4.25%. This is the 2 year. So there's something strange going on. I'd be honest with you, I don't understand it. Some people are arguing it because the economy is exhibiting underlying growth. It was unexpected by the market, and the interest rates are reflecting underlying growth. I don't know the answer to the question. I would just say if you're going to follow the trend and you follow what the kind of seasonality and cycle work we look at, September was a period in which you should see a turn in some markets. It looks like you saw a turn in the yields. Is it because some are arguing it's because we're anticipating inflation? I actually heard some people on your show saying the rates are going up because we're anticipating inflation. I don't think that's the case. Maybe maybe we're anticipating the fact that the government will have more difficulties paying interest, and therefore the United States is a greater credit risk. That's highly unlikely. So my opinion is I'm still studying, I'm still learning. I can't tell you exactly why rates are going up. I would say the trend seems to be up at this point, and I wouldn't fight it. I certainly wouldn't buy bonds. Now, listen, it could be a mistake. It could be there's many smart, most smart money managers out there are afraid of inflation, and they say they wouldn't touch the bonds. So maybe the demand for bonds has decreased because of that. As you know, I think maybe people even on your show said we wouldn't touch the bonds because of inflation. So maybe it's just a technical problem we've had since September where the demand for bonds has subsided. I don't have a real clear answer to this.
Let's take a look at the dollar then. So the dollar today, on Wednesday, went up a lot. The DXY went up a lot following the announcement that Trump won the White House. What